2017-18. What a fantastic news it has been for real estate developers. After a long time, we saw a budget which gave plenty of sops, in particular to the affordable income segment, to get a very important sector of India going. On the affordable housing segment, the big news is that the affordable housing segments finally been considered as or will be considered as the infrastructure segment. Now, what does that really mean? What it means is cheaper access to funds, better, and you can access overseas funds at much lower interest rates to develop affordable housing. Another area is definition of affordable housing, which has been firmly defined as 30 square meter carpet within the cities and 60 square within the 4 metro cities and 60 square meter carpet beyond the 4 metro cities. There's been interest subvention scheme that the government announced back on 31st of December. There is NHB refinancing, which means that more funds will be available with the public sector banks and private banks who can get that refinancing done from National Housing Bank at preferred rates, which means more liquidity to fund this particular sector. So all of this culminates into government's desire to make 1 crore houses in this particular category year on year. What government has done very simply is announced all the SOPs. I don't think the government can do anything more. The government's put the ball back firmly into the developers' court, and I think it's now an opportunity that the developers must take to gain momentum in this sector. I think with the SOPs that have been announced, apart from perhaps the city limit of 30 square meter, outside those city limits, I think we are going to see an explosion in the affordable housing segment in the next few years. We could even say that perhaps this sector would grow at a rate of 100% per annum, given the small base that it has today. For the next few years, this is a sector to watch. Other major area of SOPs which are being announced for this sector is the reduction of applicability of long-term capital gains from 3 years to 2 years, which simply means that if you did an agreement to buy a property with a developer on a certain date, so far what was happening that if you sold within a 3-year period, a much higher short-term capital gains tax was applied on you. Now what's happening is that 3-year period is reduced to 2-year period, which really means that if you sell beyond 2 years, the long-term capital gain tax will be applied on any gain that you may have from the sale of that particular property, which is cheaper than obviously the short-term rates. That's number one. Number two, the base year for indexation calculation has moved from 1981 to 2001. Now 2001 prices are a lot more sensible prices, they're much higher prices, and therefore the capital gains that arises out of sale of any property today is going to be a lot lower. If you combine both those factors, you're probably going to get a benefit of between 8 to 10% if you were an investor. Now this is a move that the government's done to get the investor interest back. There's a lot of unsold inventory that's lying across the country at this point in time, and with the investor interest coming back, we hope that we'll start slowly seeing the churn in the unsold inventory. The investors are a very important part of India's real estate economic system because they're a very large source of funding that's eluded the development sector for quite some time. And that, I think, in this particular move that the government's done, we will see the movement in that particular sector. On the note of what has not worked in this budget or what were the expectations which have not been met, clearly there was a lot of expectation from consumers or from the buyers that the limit on which they get exemption on interest paid against their home finance, that will be raised, and there will be some SOPs for first-time home buyers. None of that we saw in this particular budget. That is clearly a disappointment. The other area of disappointment was SEZs. Now SEZs are integral part of any growing economy. They're known from various different terms across the world. So, they're typically free trade zones, which we see in Dubai. We see a lot of free trade areas in China. The government has not really focused on that here in India. The SEZ clause, as we know, is going the sunset clause unless the SEZ is notified by March 2017, which is a month from now. and in occupation built by March 2020. There are no further tax benefits on that. And I think at some stage, government, if not in this current year, maybe in the coming years, that's an area where the government must focus on because it's a very integral part of India's software IT export industry. Real estate side of the budget has been positive. The overall feel of the budget is extremely positive. For us, fundamentally, the one thing that really stands out is the government's attempt on job creation. Clearly, the real estate and infrastructure side are one of the largest employers in India, with the outlay of funding that's increasing on the infrastructure side, affordable coming into the infrastructure area, the kind of growth that we are expecting in the affordable housing. This sector promises to be a massive employment generator. If you look at the budget minutely, what they have also done in parallel is put money in skilling of youth. Particularly, masonry has been mentioned. So there's a linkage between obviously what they're trying to skill the youth with and the skill that is required, which is for the building industry. I think it's fantastic. We'll see the benefits of this budget coming through, flowing through this year and beyond. I expect the Indian economy to grow at a very healthy rate and remain very positive about the growth of this country in the future.